So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here. No trade calls, recommendations, or responsible loan stuff because we're here for educational purpose only. So, 17th of December 2020, let's do this. I didn't do a midweek update yesterday because really nothing's going on. As always, we try and, we can do 1, 3, 5, whatever, the video. We'll just put videos out when something's happening. So here after the FOMC, it'll be interesting to see how we trade here. Keep in mind that today we've got the SMB, BOE, weekly jobs numbers, etc., etc. Now, what we have here shaping up are very interesting 48 hours into next week because not only do we have basically the usual FOMC action. Now, for students of markets, of history, of price action, we know that the best time to fade FOMC action is 24 hours to 48 hours post the event, right? So either you get kind of like something happen in the market's just one-way train, or usually you get a lot of choppy action on the day, kind of like an FOMC release or an ECB first move, wrong move, then it gets and then it goes the opposite side, and then we just have to wait for the fade that comes the next 24 or 48 hours. So the way this is traded here, we've got equities shakeout, then equities higher, dollar lower. So the current trend is continuing. And so this is setting up again for more of this press into Friday. And again, as we said, those 24 to 48 hours brings us into December quad witching OPEX, and also the day where all the shenanigans are going to go through with Tesla. So it's a very interesting location and will be a very interesting 2 days setting up. Now, in terms of what happened out of the Fed, I mean, really more of the same. I suppose if you had to argue for something, is that Jerome was really, if you read through the lines, again, you always have to interpret it through the FOMC speak funnel, but it was fairly positive in terms of their outlook on the recovery, etc. They're still saying, we're going to be there. There's no way in hell we're going to raise rates, but I think they're starting to talk a lot more positively about what's going on. So again, that would probably lead to maybe a surprise of them, foot off the accelerator a bit earlier, etc., etc. But again, it's a little bit early to talk about those things now. Here, if we look where we are, we're still at interesting levels across the board. And all things being equal, yesterday action was fairly interesting, right? In the daily webinar, we talked about, for example, getting long on that SNB, shouting back to Mnuchin after they were declared currency manipulator. And we said, watch this. The only thing you can do is close your eyes and get long. And if we get back above here, you'd expect it to ramp up to the confluence of yesterday's R3 and the channel. So you see here essentially what happened is we got a very technical move where the market yesterday broke above this area, ramped up, respected number one, the channel, and respected a DR3 on the day, number two. So and it's still going. So markets are still fairly technical. Things are moving quite nicely, and here it's still setting up for an interesting long in the next today or tomorrow. Why? Because we don't believe markets only go in a straight line. We like to look two-sided action. So again, and this is could be a proxy for the dollar here. What would be very interesting to see today would be some kind of a break below here today, tomorrow, and then the moment we clip back above, if that happens, we would be looking to get long for a retest of this opposite side with stops below whatever lows have been put in. Why? Because after ECB, after FOMC, after non-farm payrolls, what tends to happen is the market puts in a range, right? And what's very interesting is to understand the dynamics around that range. So what you want to do is basically understand that as long as we trade inside that day's range, so inside the FOMC day range, it's much to do about nothing, right? It's much to do about nothing. Outside that range is going to be bearish. Above that range is going to be bullish, and inside that range is very neutral, but is very likely that the market will try and do a very good job at taking out yesterday's lows and at taking out yesterday's highs to leave no stops unturned, untaken. So that's the dynamic you want to keep an eye out and watch today. Okay, so of course you can go on the daily charts and make those, and plot those and just focus there. But I mean, if you look at it really, EJ, nothing has changed. We're still stuck inside these past 10, 12 day range. So still much to do about nothing as far as I'm concerned. I'm still more partial to looking for sells on weakness here rather than buying the ramp, but nothing much has happened here. I really wouldn't comment too much on GPB because of all the Brexit headline risk. But as usual, remember what we always say, there are no such things as triple tops or triple bottoms. Ultimately, they break. Now, the short would be nicer if we get back below. But again, all those patterns always tend to break. So here, what I think is interesting is EJ, is Kiwi going to hold the break higher or not? This is a key level. It's been holding for so long. I'd be trading this to the short side a lot inside this range. Yesterday, once we started to get the rip, I covered. There's no point. But if we get back inside this range, I'll look to cover. What's going to happen here on Euro? Is this break going to hold or not? Look at Yen. We're back in this extremely interesting zone on the Yen too, right? So there are a lot of interesting levels across the board. Now, keep in mind that also, as we've been saying, sooner or later, the central banks are going to be vocal about this dollar weakness. And it started also with, we had the BOC this week saying that they were watching Canadian dollar strength very, very closely, right? And they would have to take take action. We've had the SMB that after they were labeled a currency manipulator said basically F you to Mnuchin and said, hey, we're going to do more. We don't want a strong franc. And yesterday, late in the day, some people may have missed it, we also got the ECB on deck saying that they're monitoring the euro strength and they are ready to do anything to counter that because, of course, they're not just going to sit there and watch their currencies appreciate as the dollar goes to hell, right? So again, you're getting more and more vocal central banks. So this is telling you that we're getting closer and closer and closer to some kind of a turn, right? Now, going back to these charts and what I would be looking at today, again, I think the interesting stuff to focus on is EJ. Is this still going to hold here? Is there some kind of a short? I would not be looking to get long. I would be looking for potential shorts. Is there some kind of fake out and hold back inside this range on Swissy? And I would be looking for it to try and test yesterday's highs. Is there something to do here on yen? Because again, I would expect the BOJ to start to be vocal again. And if you look at where we are here, right, this is, again, pay attention, look left. Remember this big day, this is right where we bounced off, okay? So I think this is a particularly interesting level, a particularly interesting chart. And I would have this highlighted and watch this very, very closely because in terms of possible bang for your buck, this is a very interesting trade. Now, if it holds heavy and it breaks below, would I want to be stubborn trying to get long? Absolutely not, right? Absolutely not. But we understand location, we understand asymmetry, and we understand that if we look at these key locations and we look at trades that have a very high payout, you don't even have to be right that often to be positive on balance. So again, this is probably one of the most interesting charts today in terms of risk reward. And what I would be starting to look for longs here on USD JPY is if we get a 1 hour close back inside previous day range, and similar to Swissy, hold back inside, I'd be looking for it to come back into yesterday's highs. Again, my base case here is into today and tomorrow. Since we've been coming, again, I couldn't care less if we came into these 2 days selling off hard with a strong dollar or bid with a weak dollar. Sorry, I had to sneeze. Weak with a with a weak dollar. My base case is I'm no, sorry, these allergies. And I'm looking to fade, right? I'm looking to fade. That doesn't mean I'm coming into today thinking must sell equities, must buy dollar, must sell equities, must buy dollar. I'm coming in today understanding that it's likely that we get a possible turn and very nice risk reward opportunities to sell equities and to buy dollar. Does it mean it has to happen? Absolutely not. Does it mean it's going to happen and pay? Absolutely not. But this is what's far more interesting in terms of location and in terms of asymmetry. So that's what I'm ready to do, okay? That's what I'm ready to do. In terms of equities, again, there's not that much to say except they keep on getting bid. That you just, there was a nice short yesterday we looked at in the daily webinar too. Got paid on a couple of TPs on YM and then just back off to the races. Here you have to keep in mind you're still in the context of that running into OPEC. So the action is very, very normal, right? Now, there were also some very nice longs this week. It's not only shorts. If you look at the action on ES, this was a very nice long. This was a very nice long on YM, and we discussed these in the daily webinars too, right? So this is Thursday, Wednesday, Tuesday. Tuesday, we came back into Monday's lows, and then we reversed, and this was a beautiful long for a move back into these highs, and both those trades paid, right? It's just that there's a lot more asymmetry to try and trade the long side here than to come into the morning and try and chase them to the upside here, okay? Now, another interesting thing, a lot of people have been asking and keep on asking about the bonds, and as I said, sooner or later we could get a little bit of a fake out or a panic attack on the bonds. But if you look at the ZNs here and you look at the action yesterday, I continue to say, any move lower is probably a gift. So unless you see something hard break or something out of the Fed, you'd be more into buy the dips, right? And you see the action yesterday also, every time it looks like they're trying to get traction, they get bid again. Now, keep in mind that if we're going into a situation here where you expect to see equities sell off and the dollar strengthen, you would expect those bonds to come down a little bit. But I would still look at that as a potential buying opportunity. I wouldn't be jumping into it. But here, what I would be focused on, especially on the ZNs, is, do we come back into that 37 all the way into that 36.20s? This was that kind of gap up open that got filled and bought hard, and that's an area I'm looking at. If we break below there, it means something ugly is happening. There's a lot of panic. So if you're trying to get long here, you don't need to give it a lot of room. You just want to wait for a break below and move back above, and then you get long with a tight stop. Because if we take this out and we close below this, there's a good chance we get a little bit of a panic attack, and we could easily rip all the way back down into the 34s. So no matter what size you're trading, you do not want to have $2-3 against you on the bonds, right? The other thing to keep an eye out is the action on gold, but it's all going to be related and it's all trading together because it's really just a dollar trade. So the big question here, as we've discussed, has gold put in the bottom for the year for this season, and we're ramping up into that January and February extremely strong seasonality for the metals? Is that done and dusted? Or are we going to get here into the end of the year some kind of Volmageddon again, some kind of de-risking event, some kind of a funky action that means that correlations go to one, that everything gets sold off hard in a little bit of a panic, and that's going to be your time to get back long into equities, to get back short the dollar, to get back long gold? That's the big question. So right here, the jury is still out, because you could easily argue that this is still trying to in this messy channel to the downside. So it's a little bit early to tell. So you just have to be very, very patient. But the message here going into today is that so far there have been some interesting opportunities to fade these moves tactically. There have been some interesting opportunities to get long equities to get on these moves too intraday. But right here, we're getting into a 2-day window where you would expect to see some kind of pullback potentially set up. Now remember, the last part of the moves tend to be the most painful and the ugly, and so we'll have to see. I mean, if this were usually December expiry is very, very bullish, so you would expect that also from the close today, you'd get some kind of gap up open tomorrow into the cash open. So you want to be careful. You want to watch the action very, very closely and keep in mind that, again, a lot of shenanigans can happen today, especially into the close, and tomorrow, also added with the fact that you're getting all that rebalancing and positioning to get Tesla into the S&P. So don't think the market have to move in sync, and expect to see stupid things happen, and expect to see the charts out of sync, okay? But I think I'm looking for potentially very interesting things to set up here into Friday. If something crazy happens today, I'll put out another video tomorrow morning. Be more than happy to do that. If not, we'll see. The next one will be out on Sunday as usual. Wishing everybody all the best. Talk to you guys soon. Take care. Bye-bye.